Okay, good afternoon, good morning, good evening, wherever you are in the world. Today is May 17th, 2009. Today is Sunday, the beginning of the foreign exchange trading week. Good to see everybody took out a little time in their day to come and join us today. All right. Okay, so before we get started here, everybody should be able to see my desktop pretty good with a nice little green check mark. All right, good. All right. That's what we like to see. Awesome. Everybody, okay, good. All right, so thanks again, folks, for joining us today. Let's jump right into our beginning of our week. Beginning of our week here, looks like, just check our times, make sure everything is on Central Time, which is where I live here, so I can talk about what we're doing. I'm looking at my calendar, which is the weekly calendar. Forex Factory, of course, has a very good one. FX Street has a very good calendar. Always good idea to have a calendar so that you can have an idea when economic data is going to be released. Something that's going to possibly break us out of the current trading ranges that we seem to be in quite a few of these currencies. So on Sunday today at 5:45 Central Time, which will be after our session ends, we're going to have Producer Price Index, which is a high impact for the New Zealand currency, and Producer Price Output quarter over quarter. So for anybody who's not sure of what a Producer Price Index is, okay, change in the price of goods and raw materials purchased by manufacturers. So when a manufacturer gets ready to make something, he has to purchase stuff, he has to purchase raw materials, and of course he needs to know how much that's going to cost so that he can plan out how much he can make the product and then therefore sell it for. Now, inflation is a very, very important reason that currencies act the way they do. Obviously, currencies that are experiencing inflation, at first they seem to rise a little bit. They seem to do okay. But then eventually, of course, people that are trading the currencies get worried that the currency that they're trading is going to depreciate in value if the rate of inflation gets too high. So this is a number that everybody watches for the leading indicator of consumer inflation. When manufacturers pay more for goods, then higher costs are passed on to the consumer. So this is Producer Price Index in New Zealand. So it's very important to watch any of these reports if you plan on trading any of these currencies. Okay. So once you understand what that is and what it's going to be, when it's going to be released, you also want to notice here that there's going to be a little bit of action in the Great Britain, in the British pound possibly. And this is the right move HPI month over month. Again, just quickly to see what that is, change in the asking price of homes for sale. Okay, for a long time, Great Britain had a housing bubble ahead of our housing bubble. I only point this out because I used to watch the housing bubble in Great Britain just to see what would happen there as a predictor of what would happen here. And for a long time, they had rising prices in their housing market, and then they had a stall. They had pretty much a pretty significant correction for a while, and then that bubble was able to reinflate. So good idea to keep an eye on that. I'm sure that the same thing that's happening here is happening everywhere. The bubble has pretty much burst, and housing prices are definitely not appreciating as fast as they were. Too much supply on the market, not enough demand. Okay, and we'll probably see that continue for a while. So once I get all this information processed and I make note of what time these reports are supposed to be released, this is the Sunday reports, then on the Monday I look and I see that I really don't have a lot of things happening on Monday until later on into the evening on Monday. Looks like it's going to be a very, very light day for economic data. Once I see all of this, I can look for possible trading ranges that I can trade with the different currencies that I like to trade. I don't see anything here that's going to break us out of the trading ranges. So anything that has the potential of breaking us out of the trading ranges, I would make note of. And if I don't see anything really exciting, I'll just check my headlines real quick, see if there's anything interesting there. Looks like we're going to have some housing start information coming out. We're also just checking here to see if anything's happening in the world, and really nothing of great importance. Okay, so that means I can go back to looking for markets that aren't going to go anywhere, which is fine with me. If I can find a market that's got a nice supply level and a demand level, then I can of course just trade the ranges. And I can trade long at the bottom and short at the top. So let's start off with our dollar index. Look at our weekly chart. The dollar index sold off pretty good in the last few weeks here. Just caught a little bit of a bounce. There's a very, very funny looking little drop base rally here that we sort of hit our head against on the end of the week last week. Drop base rally here. This is giving us a tiny bit of a bounce here. This is the first time back to the origin of this little move that we had here. So we may have some, we may have a little bouncing between here. And if you look underneath my moving average, it's a little bit hard to see, but there is a rally-based drop at around 86. So it looks to me like at about 82.50 I have support, and about 86 I have resistance, which is great because that means that we're probably going to trade in a range on the dollar index, which means we'll probably trade on the range and on most of the other currencies that we have. Not a problem at all. Okay, we did catch a nice little bounce here on Friday, and so we may work our way up to the top of the range as the week goes on, and then maybe work our way back down towards the bottom. As long as it wants to do that, that's great. That's the first place I want to look, though, to see what's up. And so I'm going to look at my 60-minute chart, and I can even further define that area of support closer to 82.20. I have a nice drop with a gap based in a rally. I've been coming close and finding some support each time I do. And then above here, even on this chart, I have a little bit smaller range. I have another little rally-based drop with a nice big move away at between 84.70, 84.80. So this is going to be a nice little range trading type of situation, at least for the early part of the week. Now don't forget, something could come along and break us out of any of these ranges, so we always use protective stop losses on shorts above highest highs, and a protective stop loss on a long below the lowest low. This way, just in case something happens that we're not planning for or not preparing for, if it happens to come along, we're not going to take that big of a loss. Okay. Philippe is asking about what about 84.25? Let's see here, Philippe. Yeah, there's a tiny little base up here too that probably will turn price down. But remember, as you guys probably know from being in here for a while, we had this discussion last week in some of the other rooms too. The secret with what we're trying to do is try to find the extremes. So we could definitely sell off if we hit this level, no question. It's just that if I do, my profit zone from here to here is reduced. All right. Now I could decide to take this trade, and if you decided to take the trade, that's fine. But I might fall back to the higher level, and this is the reason I pointed out this higher level. We definitely could sell off from here, no question. We could never even get to this higher level this week, but I'm looking to see us try to get through possibly here and up to this higher level, and so I picked this one instead of this one here. But you're right, no problem at all. Okay, you could definitely find some sellers here too. Cassandra is saying, per viewing the dollar index, which time frame do you put more value in, weekly or daily? Cassandra, the weekly charts, of course, is the highest time frame that I usually watch for where the trends are. And the good thing about the weekly chart is, when you look at this weekly chart, you can definitely see the trend beginning, the stages that I talk about all the time. You can definitely see all of that easily on a weekly chart. The problem is, though, is each one of these weekly candles is very, very you know, it doesn't really tell a lot of the story. So the reason I always look at the daily chart is to see if there is a supply level inside here, how can I reduce my risk on a daily chart? Where is the supply level inside this area here, for example, or inside a demand level inside this area here, so that if I decide to take these trades, I would be able to reduce my risk. Okay? So obviously on this time frame here, the higher time frames, you're going to see the big trends. And if you look at this chart here, you can see this nice big sell-off that we had. We based for a while and sold off some more. Finally based and had some kind of a reversal here. So definitely look at trends on your weekly chart. But when you're wanting to find out where possible entries are, it's always a good idea to take an x-ray of that weekly chart inside this daily chart. So that one supply level that you saw in that weekly chart is all of this trading activity here. Okay. And Francisco's asking why not the 240 chart? Not a problem. I always look at the 240 charts too, Francisco. Here's that supply level at 86 here. Okay. So we can wrap a couple of lines around this area here. And around 85 is the area right here that Philippe was noticing, which does, of course, have a nice big drop. All right. And down here below current price, we have a drop base rally right about here, which we've been coming very, very close to on this particular time frame too. Okay. There could have been a little supply here, but we had this one candle push through here, so we'll ignore this and we'll go for this higher levels here. Yeah, there's long wicks here, this big spike down here. That's a little scary, so definitely found some demand down there though, because we were able to push all the way down here and then rebound to here. So there definitely probably, if I look to the left, is a nice demand level at the bottom of that particular wick. Okay. And at close to 80 here, from back in December, we have this nice drop base rally here. So I made note of that one too. Okay. So we probably got really, really close to that demand level down there. And that's why we had that big snapback. All right. Bottom line though, guys, since we're not trading the dollar index, we want to make sure we note where the supply levels and the demand levels above and below current price are, so that we can identify at the beginning of the week where the likely tops and bottoms of our trading ranges are going to be. Okay. Jim's asking, Steve, what time frames are the stages made in? You can see them happening in 5-minute charts. Good catch there, Jim. The stages, the 4 stages that I follow when I use the 4 stages are on the weekly charts. I expect to see stage 4 followed by a 1, followed by a 2, followed by a 3, kind of repeat over and over again on the weekly charts. But if you go down to a 5-minute chart, you can definitely see 4 stages on these charts too. It's just that there's also the possibility of having basing followed by further rallying, but you don't always have to make the basing and then dropping like this. So the smaller the time frame, there's also the possibility of rallying, basing, rallying, basing, rallying, and continuing to go higher and higher that way, versus a weekly chart which pretty much likes to go 1, 2, 3, and 4 over and over again. But you can see that pattern happen on a weekly chart too. That only means one thing. Here it's a stage 2 uptrend, a stage 3 top, and a stage 4 decline. But when we were looking at this, we could have just as easily prepared for a breakout to the upside as to the downside. And if that's the case, if it did break out to the upside, we would continue to buy dips, okay, because we're still rallying and going higher. And in an uptrend, the way to join an uptrend, of course, is to find some kind of a way to buy a dip to join the uptrend. Okay. And so that's this 5-minute chart here, though, definitely could see that pattern. But you could also see a continuation pattern like this. Stage 2, stage 1, stage 2, stage 1, stage 2, stage 1, and repeat all the way up. Okay. All right. Where can I get dollar index charts for free? Andy's asking. Andy, that's a good question. Here's a website right here I'm going to type in where you can get the dollar index chart for free. You can definitely go to this website here. Oops, there we go. Didn't think I saw it there. So you can get these charts, and you can actually get them to where they look really, really good. So that's a nice place to get a dollar index chart for free. All right. Okay, good. All right, so step by step now, we're looking at our dollar index, and we're starting off the week thinking some kind of trading ranges for certain currencies. Okay. What happened last week in the Swiss franc? Does anybody know, really quick? Anybody hear any kind of news announcement? Okay. There was a surprise interest rate cut last week in the by the Bank of Switzerland, and again, certain currencies. Probably what really kicked the dollar off for a little bit of a rally. Not every one of the currencies had as much of a reaction. Some of the currencies had a bigger reaction than others. This Australian versus the Swiss franc here, I wanted to bring this chart up because we've definitely broken out of that trading range here on this daily chart, and we've still sort of started a little bit of an uptrend. We got very, very close to some textbook resistance here. As a matter of fact, if you drew your line on these prior wicks here, this top of this candle here actually hit this little textbook resistance area right above current price. And we've been bouncing on this trend line, which I drew, and I've left on this chart for a while here. And we had a question last week about trend lines, and there's a classic example of actually probing this trend line, closing above the trend line, and the opportunity to buy prices at the dips on a trend line in an uptrend. Because remember, in an uptrend, any kind of basing like this, any kind of pullbacks are being bought at higher and higher prices. All right, so we see the trend line. The trend line seems to be working. We also have this little drop base rally at around 82 that we were watching for a possible area for a pullback too. So we do have some support here still on this Australian. We need to get rid of this textbook resistance here. It might take us a while to do so. And then above there, of course, we've got this nice rally base drop supply level, just about 90. Okay, so if we look at our weekly chart, we actually had a drop base rally, and the low for last week was the origin of this little rally right here. So it's another reason why we want to watch these little bases that form on weekly charts and daily charts, just kind of get an idea where the weekly low might be. So this is definitely some kind of little support area that we drew in last week, last time we looked at this market. Okay, and we had our stage one down here, as everybody is kind of noticing and pointing out, and now we've broken above these highs and we're starting our stage two uptrend, and the currency possibly has a way to go, at least until we hit some of these higher supply levels. Okay, so this could be a nice uptrend for this currency too. And again, the fundamental reason for that, of course, is interest rate differential, with the Australian yielding 3% versus the Swiss franc, which is at 0.25%. Okay, so if I go down to my 240 chart here, I can see that this is the long sustained uptrend that we've had, and kind of few pullbacks many times. But again, we've managed to rally and continue higher every time. So we would look for a demand level on this 240 chart. Easiest way to look, of course, could be just take your cursor and go down below current price and go look for a drop base rally. Here's one here. Wrap a couple of lines around it. Okay. And then, of course, above current price, you would look for a rally base drop that you could wrap a couple of lines around too. Here's one that's very, very close to price right here. And of course, if you take that one with a little tiny demand right below, you could get stuck. You could trade through here, or you could trade through this demand and come down lower. So I'd probably want to look a little bit higher up to see if I could find another one above current price. And if I go up and to the left, I've got something up in this area around 90 that we were looking at here. All right. And of course, once I find that line, I can open it up and see what it looks like and try to make it a little smaller. Now this is actually a one candle base with a big wick. So there's probably some sellers up here at this place here, but we wouldn't really consider this to be a nice level. We might go to a 60-minute chart to see if there's something inside of here. Let's go back and look at that higher level though and see what that looks like. Okay. That level you could say has already been visited once by price, got very close to touching it. You could make note of it, or you could go for a higher level, possibly this one above here. We'll leave this one on the chart for now. All right. So if we come back here, you've got a nearer level and you've got a farther away. So depending on which kind of trading you want to do, you could definitely, like the floor traders used to do, like Sam said, you could definitely take the bounces off of this level as many times as you want with a target here, and it's about 100 pip range if you want to trade it back and forth. Or if you're a trend trader, if you're more some kind of a trend trader, you could wait for either this area or this area to get traded through and then trade at the extremes like we usually try to do. Okay, because this strategy really works better when you're trading from as far apart as you can from each other. Okay, instead of trading very, very close to each other, you want to try to get as far away as you can. This area here can go back and forth for quite a while though, so it's something to watch. And on my 60-minute chart, we had this drop base rally here, hardly bounced at all. Another reason why, of course, you'd want to use your stop loss. We were able to trade through this one. Okay, actually went lower on this particular chart here. Okay, there's another one down here, closer to 82.30. So it's not going to work every time. It's not supposed to work every time. Obviously, if it did, it would be a good thing. But for the times that we're wrong, we're trying to narrow down our losses to be very, very small. And for the times that we're right, we're trying to make decent gains when we are correct. Okay, so this area here is the next area below current price. Unless you want to give this one here, this is a tiny one here down here, which is close to 83. You could also give this one a chance too. And then above current price, again, taking a cursor and going up and to the left, you've got an area here where you had a push up. So this may not be very good resistance here. That's that area with the big wick that we're probably just going to ignore because of that wick. So right here, the next best area here is this tiny little area here. And I might just use that to initiate a short position. Okay, or I could use it to take a profit if I happen to buy from down here. Entirely up to you which one of these levels you want to trade. Don't have to trade them all. Okay. All right, so Australian versus the yen. Quite a few currencies sold off last week against the yen. Oh. As a matter of fact, on our weekly chart, I had my trend line here, and it kind of moved over a little bit. We're still kind of hugging this uptrend line. Let's just get rid of this and put a new one. Okay, connect this low to that low. Okay, and we kind of sold off pretty good last week. There's a nice big, finally a sell-off candle, but there's been such a big move up here, it's not unusual to be some profit taking. So on our weekly chart, the uptrend is still pretty much intact. Now I could connect this low, this higher low, with this low from last week, but the angle of that trend line and the proximity of this trend line probably means you don't need that trend line there. But you could wait for a test of this trend line closer to the 70 number on the Australian versus the yen next during the course of the week here, if you're interested in trading this pair. And we kind of identified a demand level below current price, a funny looking one, a real big one, drop base rally here. The origin of that move is the line in the middle of the chart. So looks like we're going to come down and test this area. We have our resistance area above here, but now The bad news is we now have a little bit of a supply level right above current price here too. So unfortunately, if I trade from this 70 line here to 75, that's a decent sized range. That's not bad, don't get me wrong, but you don't like to see this because it just tells you that you're going to go back and forth between these two areas probably for the rest of this week. And let's just take that big line off. Let's give it a chance to come back down to here, so that I've got some kind of decent room for a possible profit zone from possibly about 68.60 up into this 74.60 area. So it definitely, though, here's the thing. It is a drop-based rally which starts right here, and it's a little bit higher up. But the origin of the move actually is quite a bit lower. So if you want to try to reduce your risk, you could just ignore that and just wait for price to come down here. Then place your stop loss below this pivot low here. Okay. So when we look at our 240 chart, we can see that it's not as smooth as some of these other currencies for sure. Looks like it jumps around a little bit more than some of these other currencies do. This is the area above current price where we do have a nice little supply level. Oops, let's get rid of that. And actually there's another one right here closer to 74. So there's plenty of areas of resistance above current price. Okay, just a couple right there. And below current price, though, on a 240 chart, you've got this pivot low, which is the origin of this big move here. And below there, you've got this area here. So we'll put a few lines around each one of them and keep an eye on them as the week goes on. We could possibly make something out of this area if we go down a little bit smaller time frame, which I'm going to change this chart just to see what it looks like. Or you could let this area ignore this area and wait for a pullback to this lower area too. Entirely again up to you. Just go down to a 60-minute chart on here though and see what those two levels look like. And here we could tighten this level up to here by going down a level. And then we could tighten up this big level to here. And we've traded down below here. We had a little bounce off this area. So there's one of those drop-based rallies here that actually produced a tiny little bounce. But now we're selling off, and we're probably going to come down to this area down here. We've got some rally-based rallies on the way up there that might bounce price a little bit for sure, but this is the area we're looking at, and you could tighten up your stop loss to down like this if you want to take this area instead. But if you look, there's plenty of little areas here where you could catch little bounces, just a bit above there too. Okay, right here, for example. This might produce some kind of a little bounce too. All right, so we've switched over though to selling off. So we really want to look for shorting rallies on these currencies when that happens. Below 71 here, Cassandra's got some good eyes. She saw this nice little rally here. She's interested in this. Yeah, there might be some buyers here too, Cassandra, for sure. If you're interested in taking a chance on this level here. All right. You might do like this though, you see. So just be quick to take profits on any of these levels that you're looking at, because these rallies are, just producing small bounces and then trading down to lower levels. Okay. Yeah, that's fine. That's a good catch. I don't catch them all the time. Then I sit there. It's like this one here. You could actually see this one too. That's pretty close to this lower one here. Yeah, and that's the problem when you got a bunch of them on top of them. Yeah, well, I've only put about 1,000. Let's see. Maybe I'm into the hundreds of thousands of lines on charts right here. So I should be pretty good at catching a few of these. Oh, Alicia's asking about the 76 area. Let me go back to that chart. Let's look at that 76 area. I kind of moved a little bit too quick. Okay, I did all of this on this chart here. The 76 area. Actually, this rally-based drop was already visited once, Alicia, so this 76 area could definitely turn price again, because what happened is we only barely penetrated the level. So we could definitely come back up here again and find some sellers. It's just that we'll have a hard time getting to this level because we'll probably run into some sellers right below it, which is closer to 75.50 or so. So it's not that it's not a good area. It's definitely a good area. It's just that we'll probably find some sellers ahead of that. So since this should be a 240 chart, what I'm going to do here is turn this back to a 240 chart. And for anybody that's asked this question before, you just go right back here and type in the number of minutes you want on the chart. And you can see that that area is still fine, that 76 area. It's just the turn might come a little bit sooner, closer to 75.50. Right? And these are some of those areas below current price that we were talking about. Okay. Cassandra, if we were looking for a swing trade, set it and forget it setup, would we look at that 76 area as high on the curve? You sure could. That would definitely be high on the curve based on where we are here. The only problem is you can see on this chart, the weekly chart, looks like we just opened for business here. We opened a little bit below last week's low. The only problem with the weekly chart is the curve that you're seeing here would still have you below the 50% mark on the weekly chart. And so your longs are going to work out pretty good too, but you're getting to that point on the chart where your shorts are going to work out pretty good too. So point is depending on the chart you're looking at, supply level above current price, demand level below current price, equilibrium, your shorts will work out. This is finally a supply area. We've just pretty much ran past all this other stuff, and we're pretty much moving higher now. And we don't really have anything quality as far as supply goes till way up here. So a swing trade, set it and forget it. You probably would want to initiate some kind of a swing trade here, on this area here. Okay, but you definitely could have a pullback to here, a sell-off below here, and an extension from here, possibly down to these lower demand levels just as well too. It's just I don't really see it. I see this thing probably trading sideways for a while and eventually breaking out back to the top again, and extending the ranges up a little bit higher. But that could change. Anything could change what I'm saying today in a heartbeat, right? And because remember, these currencies are all depending on the economies of these countries, and currency intervention. The Japanese government could try to weaken the yen. All kinds of things could happen. The Japanese government, they're so messed up in Japan. Not that we're much better, but they're very, very messed up in Japan, and they are famous for trying to intervene in the currency markets to try to affect their economies. Okay. So here we move on to the Australian now versus the New Zealand. And again, we said this one's one of those currencies where interest rate differential doesn't mean a whole lot. And so we're actually basing up here and really stuck by this high time frame supply and just going nowhere, absolutely nowhere, in some kind of a symmetrical triangle kind of pattern. So this currency has been really, really hard to trade. We did rally into this supply level. We bounced against it once, twice, pulled back both times. Third time we're pushing through here again. And there's what I mean by having a demand level and a supply level so close to each other that they're pretty much just killing each other here. Okay? So frustrating to try to trade this particular currency. And there's a supply level there that we looked at, and here's the demand level that we picked out too. So we had our demand level from last week below current price and our supply level, and there's an example of coming down to the demand level, filling the gap, the whole gap, and then rallying from here and coming up to the supply level. And there's that's what price is. Sam would love to say that's what prices do. They go to demand and then they go up to supply. So whoever it was who was trading this currency, that's pretty much what I had in mind when we talked about it, and I hopefully when you got that email you saw what I meant. And there you go. So that could be what we have this week on a bunch of currencies. All right. So what happens now? Looks like there's a tiny little itsy bitsy demand level that formed here. And we're just selling off here, and we could possibly come down to this 127.30 area, find a little bit of support. Now, for you swing traders, okay, or for anybody that's using limit orders, depending on where you set your stop, this could be really, really frustrating too, because if you set your stop a few pips below this low, which was 125.59, this low was 125.48. So if you had a 10 pip stop below here, ouch, you're stopped out by 1 pip. And don't think that hasn't happened to me. I mean, this has happened to me several times. Okay? So I just wanted to point that out. You'll find these demand levels. You'll really, really get good at all of the things that we're doing here, and it's still possible to have losers too. Okay, so just wanted to point that out. So that was our Australia, New Zealand from last week's class to here, to today. Okay. But I traded this a couple of times last week or the week before last, and got to be really, really frustrating trading it. And if I was trying to enter on a 60-minute chart too, here's the other frustration. If I decided to limit my risk and go to a 60-minute chart because of this big spiky wick, and I put a limit order in to buy at this price level here of 125.50, my low was 125.48. If it hit it on the bid, I got in. If not, I didn't get in. You know, so I could have missed this entire big move by a couple of pips too. And don't think that doesn't happen too. Okay. Yeah, but this one here is a really, really big spread. Okay. Let's see what the bid right now is, 127.59. The offer's at 127.85. So you got to use limit orders to trade this guy. Otherwise, it's really, really terrible, the bid-ask spread. Let's go with our Australian versus the dollar next. All right. And I've got a few people that, of course, trade this because of where they live, and you've still got a nice uptrend here. You had a week where you pulled back a little bit. You could drop here down to this weekly base here. I mean, the origin of this big move up. You could definitely come down and test support and still be in an uptrend. And we'll see what happens there. But the angle of this trend is starting to get a little bit steeper again. And again, if I connect perhaps this low to here, the short-term trend line is definitely very, very steep. And since it's the beginning of the week here, you know, you don't want to wait for a close below a trend line on a weekly chart, because you could lose a lot of money if that happens, depending on where the low for the week is. So you can't really, you know, you can use these trend lines as a guide on a weekly chart, but for taking entries, if you wait for a close above here, this weekly candle could close way up here, and then you're entering at the start of the next week. Or you could enter and get stopped out because this weekly candle could end up all the way down to your lower trend line. So, you know, they look really, really good, but sometimes entering on trend lines on weekly charts and waiting for closes, because your rules, your general rules that everybody follows is you need a close below a trend line to actually exit a position. So here, if I waited for the close of this candle this week, you know, the trend line was way up here, and this candle was able to close way down here. But rules are rules. So if you're following weekly trend lines and using them, then go ahead and you know, use a weekly close to exit a position or possibly enter a position too. But unfortunately, you know, the angle here of this trend is pretty steep, so you expect some kind of correction. And this Australian did the same thing that it did down here at 72. Remember when it was at 72, it made a rally-based drop, and it tested that level and pulled back for a couple of hundred pips before it was able to rally past the supply and move higher. So it came up to this higher level, it made a rally-based drop, and last week, and it rallied up into that area and has sold off a little bit since. So you know, we could definitely come down and find some support here, possibly. There's nothing really to stop us from dropping because there's no basing in there. So we could come down a ways from here, and we might have a hard time getting past this new supply level. Okay? But I don't know how many people, I know one or two people actually opened up short positions on the euro under the same circumstances here. We made this rally-based drop, and we rallied up into it, and it did produce a nice little turn here. And we traded past these demand levels below here, this demand level, that demand level, found some support down on these pivots here, and then made another drop-based rally, but only took some bounces up into these new supply levels. So, you know, this is the beginning of what a trend move looks like. You get your supply level, you rally up there, you sell off and take out these buyers here. You manage to get all the way down here, and then there's another rally-based drop that you can short down at this lower level. But if you're short from up here, of course, you could drag your stop loss to here and hope for another drop-based drop to form, or a rally-based drop below here too. And the next area where there is some little support would probably be down around 74, which isn't that far away. Okay, but here, it's a different looking little situation right now, because on this Australian dollar, we're taking out demand levels, and not good. If you happen to be long, you should be out by now when this one traded away. Okay, that's our rule here, by the way. You know, you always want to drag your stop if you're a swing trader to the new low of any kind of a base here. Even a rally-based rally, you could drag your stop loss to that low. That way you can stay with that trade for as long as it wants to continue in your favor. But as soon as you trade below these lows, now your rally-based drop, and people are shorting rallies into these supply levels. All right? Did anybody take a trade on this Australian? Okay. Not too many people trade it. Okay, good. That's all right. I know a few people took the short on the euro. It looks pretty much the same. Michelle trades it? Okay, good. And again, I was doing the MIT room last week and talking about the strategy here, which is, you know, if you see a rally-based drop form and you want to take a short first time in there, here's your entry point with your stop above the pivot highs. Your first target is where you ran out of gas when prices dropped before the rally. Your second target is any kind of textbook support below current price. And then your third target, and reverse to a long down here at your demand level. Okay, so I marked this off again for you guys like I did for the MIT room. Okay, and so we had the higher supply level, never get a shot at that because we never came back up here. We made another level here, and this would have given you a nice little chance for the shot at the trade. And Jim's question about his earlier question about the 4 stages applies to this too. If this forms on a 5-minute chart and you want to give this kind of a trade a shot, it's all the same. Nothing changes. You see the pattern. You short the first rally. You place your stop above the pivot high. Your first target is where right before you rally back up here, wherever that turn happened. And as you can see, there's really nothing across from it. It just happened to turn. And your second target, of course, is any kind of place where you found support in the past based on these pivot lows. You found some rallying here. You already bounced once off of here. And then you've got your demand level where you'd probably want to take this trade off. Okay? So that's the Australian versus the dollar. Nothing wrong with the uptrend, but just a little bit of minor profit taking going on. We'll see. Okay. All right. Let's look at our euro currencies now. Start with the euro versus the dollar, the major one. Just open for business. Okay. So our weekly candle just opened here. We had a rally 2 weeks ago. We had a little candle that kind of stuck there. It didn't go anywhere. And we've got this new week just started here. All right. Now it could rally up here and go for the supply level above here. It could sell off and come down to this weekly demand level. But I do expect it to trade between this area here and this area here. Again, on a weekly chart, we're still inside the weekly ranges. But what do we see above current price on a daily chart? Okay. A new rally base drop. So everybody can see 1, 2, 3, 4, 5 days where we based, and then all of a sudden we get a close below here. So now we've got some supply at the 135.80 area on a daily chart. And of course, since it's a big area, you could put your line across the lowest bodies here. You could put your line a little bit higher up and go for the actual turn here. Okay, but somewhere inside of here, you want to look to initiate some kind of a short position. Because the market has turned around again and done the same thing like it did here. Rally, base, drop, and there was the first pullback to that area back at the beginning of April. So here we are, the middle of May. Can't get past this 137.40 area. Too much supply up here. So we made a new supply level, and now we've got a new supply level above current price. And we've got some support below current price at around 134. Why do I say there's support here? The origin of this big move up here, number one. Number two, it's a round number. There's usually buying on the round numbers. So I expect to see some kind of base, kind of channel trading back and forth between 136 and 134. So that's a considerable smaller range for the euro, right, than we've seen recently. Okay, I got a few emails. A few people saw this happen. Rally, base drop up at around 136.70 or so, and the first retracement into the base here. Okay, and that happened on 5/14, and it's dropping ever since. Now it's made another little base above there, which we haven't really got back to yet. Another little rally base drop at about 136.30 or so. So far, for some reason, we're bouncing on this little pivot low. We found some support here in the middle of nothing, except for this wick here. So we certainly could come down a little bit lower, maybe bounce on this little area with the origin of the move here, maybe come all the way down to the demand level, find some support on this pivot low, or this pivot low here, or the demand level down here. Good catch there. Andy's looking for the pattern head and shoulders. Yeah, you've got a kind of a left shoulder, head, right shoulder, right? So you've got you definitely had some lower highs here going too. So you could almost say you had a little descending triangle forming up at the top. So this 240 chart, pretty interesting picture. But there was the opportunity for some kind of a short. And if you go to a 60-minute chart, though, you may or may not have gotten the trade, for sure, because here's the base. Unless you caught this turn right here, you never really got back there the second time for any kind of an entry here. So on the 60-minute chart, unfortunately, you may or may not have gotten the trade. But if you did, and you make one of these bases, you would just trail your stop on your short right here. Same thing down here. Let's say, for example, you caught this long on this reversal here, and its price is constantly moving in your favor, and you made these bases, you would just trail your stop on a long to any of these bases on the way up. And just continue with that trade until, of course, you trade down through one of these areas here. And then you could, of course, come down to the bottom of the chart without anything really to stop it. All right. Now this demand level down here at 132.75, we'll keep an eye on it, but we managed to come quite a bit of a ways in there. So really nothing of quality as far as that goes to stop price from falling. So Again, 60-minute chart, with the demand levels not being that great below current price, that makes a short into this area a possible good opportunity for some kind of a trade, maybe all the way back down to this lower demand level. So this would be a very, very good opportunity for us to short this area here for a possible pullback way, way down to possibly this demand level here. So everybody see how that works? Because there's really nothing of quality to stop price from falling in this area. You know, you've got some basing and, you know, a little dropping basing in here. But if this can go away, this little area here, drop base rally can go away, then you've got the opportunity for a trade from here all the way possibly back down to here once this area is gone in the middle of the chart. So we'll keep an eye on it though. That's a little bit closer to 133.40 or so. Okay, just put a line there with a price on it so we can see it. 133.40. But that's nice though. 136 to 133.40. That's a nice range. But we're looking for range trading for sure going forward. And then, of course, you can play this game now that you've opened this week. You've got a gap down here. You're on a 5-minute chart. You could play this game on the 5-minute charts if you want. I would strongly suggest that if you're going to trade these little 5-minute charts, you know, just make sure you place your stop losses above these highs on a gap fill for a possibility to get short. Okay. Or if you did take this little bounce off this little base here, make sure you place your stop losses below here, because once we drop below there, and that's about, let's put this line on here so I can see what this is in the past. Once we drop below there, we could possibly drop quite a ways from there. There is some kind of demand level down below, but it's nothing really great. So for sure, once we trade below here, just if you do trade below, you want to get out of that trade for sure as fast as you can, because there's a long ways down to the next one. Okay. And above current price here, we just got this gap. You want to try to short the origin of the gap. If you're going to trade for the rest of the day today, something to do, there's your areas right below and above current price. If this was the S&P 500 and we happen to be, you know, trading early in the morning, 1 o'clock in the morning, 2 o'clock in the morning, then I would be more comfortable taking any of the trades that we're talking about here. But this time of the day, there's really not a lot of participants to trade with. So, you know, you can get push-throughs on a lot of these areas pretty quick. This is the little base that we're in right now on the 30-minute chart, and that's why I say below these lows, there's a long ways to go until you find any kind of support. Okay, so all right, so that's a pretty good summation of where we are with the euro. Definitely nice supply level above current price that we want to watch out for. Good opportunity to get short euros. Okay. All right, let's move along here. Since we're doing the Australian currencies and the euro, we'll take a look at this currency real quick. And this one here is definitely found a little bounce on this, the origin of this big move up here so far. So we've stopped dropping for temporarily anyway. All right, but anybody trading this euro Australian with a green check mark? Okay, not too many people trade it, and you can see why. I mean, it's got a lot of wicky kind of currencies. It is bouncing off of this demand level here, which we kind of had in here from the beginning of last week. Kind of a funny looking drop base rally, depending on where you wanted to place your stop. I actually had it below this pivot low, but you definitely could have exposed or opened your stop loss to here. But we wanted to try to catch the origin of this big move if you were going to trade it. It's just that now you've got supply levels right above there too, so that's never a good thing to have a supply level like this this close to you when you're trading a currency like this. Okay. And the spread's 10 pips or so on this particular currency too. So if you were going to trade it, make sure it's another one that you're using the limit orders on. All right. Just 240 chart. Anything of excitement down here? Not much movement since it hit that little demand level here. And it's so not too many people trading it. So we'll move on from that one. I know a few of you are trading the euro yen. And if we go to our weekly chart here, this demand level got traded through, no problem. Too close to supply. That'll happen. Okay, that's the reason why I try to tell you every time we have one of these sessions, when these areas are on top of each other, one of them has to go. There's no two ways about it. It's either going to be this demand level below current price right here at the time, or the supply level above. And so this time the demand level went away. It was a funny looking demand level anyway, and it was pretty close to this little speed bump resistance area here. All right, so this one here on the weekly chart kind of stalled out. And we really didn't have anything, again, quality until, as far as supply or demand, until we got down to a little bit farther apart here. So we like to see these ranges open up a little bit. We like to see some of this little demand below here get taken out, or so that if we do take a short on a rally into here, we can open up our profit targets for possibly a visit down to here. With this stuff in the middle here, it's kind of just a back and forth kind of trade between 125.60 and 132.70. All right. So it wasn't anything really exciting when we looked at it last week too. And the 240 chart here, there was your first test, which produced a nice little move. And then, of course, second time back, no buyers. So now you've got a supply level right above here. All right. And really nothing, no basing at all to stop us from dropping until we get quite a bit lower. So, okay. And this is what I'm kind of worried about on some of these currencies too. You know, possibly looking for longs would probably, you could catch bounces, but I don't really see anything solid here. But you definitely want to focus back on shorting the rallies if you possibly can, if you're trading that particular currency, because we are basing and dropping like we are. And there's nothing really until down here. Okay? So, don't know what got into these currencies, why all of a sudden the Japanese yen is suddenly, here's the bounce on that little speed bump over here in the past, and then selling off again. So people are shorting rallies on this currency for sure. And here's where we are right now. You've got a speed bump here, a speed bump here, and then nothing until down here. But that's okay if we do get some kind of a rally off of one of these speed bumps up into a supply level. You'll get an opportunity there that way. Okay. All right. Euro versus Swiss next. Now this is the one currency where when Switzerland had some kind of an announcement last week about possibly again purchasing, either they were purchasing treasury securities like we've been doing or something, you had a pretty strong reaction here. Okay, the quantitative easing rears its ugly head again. And here's the quantitative easing from back in March. And here's the little tiny reaction where they announced that they had quantitative easing going on this week, or right at the end of last week. So this is part of the reason the dollar caught a little bit of a bounce. Not to mention it hit our little demand level below current price, but So we definitely saw that happen. And if we start with our higher time frame chart, that pretty much kept our little bull flag intact here. We kind of turned around and bounced a little bit out of here. So our little bull flag that we were looking at still has a chance to actually continue on. All right. And you can see a drop base rally on that weekly chart inside this base right by this moving average here. It's a little hard to see with the moving average and all the other lines in the way, but you might find some support down here this week at 150.80. You're currently at 151.20, so you're not that far away. So it's possible that there could be a wick all the way down to this area here. Okay. And then we rally on from here. And don't ignore this guy here, closer to this price level at about 155.15, because that is a nice big rally base drop on this weekly chart. Okay. And we marked this little guy off here last week when we were looking at the currency. We had this drop base rally here and many bounces all week long on this area. So the floor traders, as Sam used to say, would look in the basket, and if they saw a big pile of orders still in the basket, each time price came down to the level, they would buy. So that's what he means when he says, you could bounce many times on this area. And then, of course, now you've got the drop base rally, but you've got the big wick on the rally candle. So I don't know if I'd go to the well anymore on this particular area. And if it was me, I would probably, just to prevent temptation, I would just move the lines over here and maybe take some trades on this area here, 150.60 here. And we still haven't broken this downtrend line, which I drew on the daily chart. But we definitely are rallying back up to it, so we'll see what happens from here. Okay. And again, you still got this big area of resistance above here, not too far away. And somebody's pointing out that the S&P is falling. Yes, it is. Okay, the S&P and a few of these other markets are definitely selling off. The 240 chart's pretty much the same thing. We could base up here for a couple of hours on this 4-hour chart and possibly rally past this supply level here. It's more like speed bump supply, drop base drop, but it's definitely there. All right, but that's why we do this every week, guys. We kind of looked last week for a possible area for a bounce, and if you had these areas marked off and you were interested in trading this currency, you had a place to possibly initiate a position with a very small stop. And that's all it's all about. I mean, we don't get that intervention, of course. Maybe this thing is just hanging out here doing nothing, absorbing demand to go lower. Okay. All right, and how many people like to trade this Euro Swiss? Okay, another non-exciting currency. Not too many people do. Alicia does. Okay, good. All right, that's good. So, Alicia, this one's for you here. But here's something that really, again, could be frustrating. You identify this area as a nice place to take a trade. Okay, you place your limit orders. Okay, you put your stop loss 10 pips below this pivot low. You get an entry here on this candle, this first candle. You get a nice little bounce. Maybe you take your profits. Maybe you don't. And if you don't, you're stopped out right on this big super candle here. Okay. That's okay, Daniel. Yeah, I've been there too. We'll see you next time for sure. Okay. Yeah, this week is probably going to be a little bit sleepy as far as the currencies go. All right, so we did open up below this little base here, so we might get some selling on a rally into here, but I would be careful if I did take this trade again with all the wicks. So if anybody's interested here, well, there's an opportunity on a 60-minute chart where we gap down below, but the problem is you got these big wicks here, so be careful for that. Okay. Awesome. 7 pip spread for your broker. Okay, We've got a bid of 151.23 and an offer of 151.30. So we got the 7 here too. Yeah, these wicks will eat your lunch, Cassandra, for sure. But want to make sure we're aware of this area here. Your entry would be at about 51.31, and your stop loss would be above 51.45 if you did take that trade. So, and with the spread, that's another 10 or another 7. So I would probably pass on that, even though it looks really, really nice. But you can see if it does sell off coming into here, if I used a confirmation trade or something, it's got a long ways to drop because there's really no basing at all. This was just pretty much a straight shot up, no matter which time frame I go to. Okay? So if you really, really wanted to narrow it down here to where you could take this trade, you could probably reduce your risk a little bit further too, up by going down to your smaller 5-minute chart. And it's got this little bounce going on this base down here right now. So if it could trade through here, it could probably drop to this low and then collapse all the way down to the origin of the move. Okay. All right. So right end of the curve for looking for shorts though on this particular currency here. And again, another reason why you don't want to go to the well too often. We had this supply level from 513 that we identified on the 30-minute chart. It did the trick the first time, but no sellers the second time. So it's just kind of barreled right through this thing the second time. So we did our job. We identified a nice area on this 30-minute chart to actually initiate a short position at the beginning of the week. That's really all we can do. When we're looking for trade opportunities, is look for the places where there's likely turns. Okay, and if we're in front of the computer when we time to take the trade, we have some opportunities. Okay. All right, so this is what that 30-minute level looks like. But again, these wicks are high, big ones, so you can definitely take a pass on this if you're not interested in fighting with those wicks. All right, let's move on to the British pound versus the euro real quick. And then we'll take our break before we go on to the rest of the currencies versus the Great Britain pound. So we'll look at the 240 in a second here, but let's start off with the weekly chart. Nothing's really changed. We're still finding support at this 87.50 area. So nothing's really changed here. We're still stuck up here where we could still have a stage 3 top, no question, if we want to break out to the downside. But these two economies are pretty close to each other, so there really isn't a lot of movement here. And our daily chart now, we got a problem. We made another rally base drop above current price, and look at how small the range is between our supply and demand level on this chart. This is unusual for this currency. It's usually a pretty big mover as far as ranges go. So to have it looking like this is pretty much going to be a yawner too, right? Very, very close to, both levels are very, very close to each other, 88.30 and 89.30. So there's 100 pips in between here and here. All right, so if this little bounce area goes away and this big area goes away, this could open up to a move down to these lower levels on the chart. But it's going to be tough sledding trading that particular currency. And on this 240 chart, this was the demand level, drop base rally, and we had some nice bounces off of that area. We finally traded through there, and that's an example again of absorbing demand at a price level. And then we came down to this lower area, no bounces the second time, so we kind of opened things up for ourselves on the 240 chart because price was able to trade all the way down here. So there really isn't a lot to stop it from coming all the way down to the origin of this gap. So when we get to these 240 charts, we want to make sure we made note of this little area, and it held price up for a while. This area held price up for a little bit. but now it's wide open to down here. So I like this chart, this 240 chart, better than the daily or the weekly, because now I'm going to leave price alone until I get down to here for a long. And here we had that gap, rally, base, drop, and our pullback over here at around 510. So now we've got a little bit of room on here for these two areas. All right. And if you go down to our 60-minute chart, okay, that's that level down here, the origin of this great big move up. And if you're watching it and if you're trading it and if you're following it on a 60-minute chart, it almost looks like that area we were just talking about on the Euro Swiss, where you had the super big wick, but you did get a pullback into that area, and then you were able to trade below all of these little demand levels and break out to here now. So sometimes that's what happens, though. Certainly don't want to ignore that, because we had that nice big area here. We were able to go a little bit farther on this one, though. Okay? So when we were able to go a little bit farther than we were on the Euro versus the Swiss, but the results were the same. The first rally back into the supply level was a nice turn. Okay. All right. So that's a couple ideas for that one. And let's see on the 30-minute if there's anything. No. That nice level only produced one bounce. The second time, no buyers. So we're going to fall all the way back down to this thing here. And it's the origin of this big move up here. All right. Okay. So before we jump into the British pound currencies and the rest of the currencies here, we'll let everybody take their break. It's 3:45 here, Central Time. So why don't we just take about 10 minutes, come back, go through the rest of our analysis for the week, all the Great Britain currencies and all the dollar currencies that we can look at. Okay, and if you have any questions on particular currencies, okay, Cassandra, 30-minute. This 30-minute chart here, that was the rally base drop with the big wick. You might want to try to take a trade because we got very close to this 89.40 area. It didn't really go into it, but on this particular chart there is a lower supply level here at around 89.40. But from where we are right here, nothing until we drop all the way down to this 88 area. Just let's call it 88. And again, inside of here somewhere, inside this level here is a drop base rally, which is the origin of that move. We can even tighten it up to just be this little guy right here. So here's our demand level below current price and our supply level above current price. And right here, nothing to stop it. So there you go. There's our euro versus the pound. Okay, so let's take our break. And thanks, guys. We'll see you just in a little bit. Get yourself a refreshment. Okay. Okay, let's get back to work here. Can everybody see my screen here, my desktop? Should be looking at TradeStation, I believe. Good. Awesome. Okay, good. All right, so we're moving on to the British pound currencies. And this one here, this is the Great Britain pound versus the Australian dollar. We finally found some kind of support here. The support at the bottom of my chart. That's just about the only thing we have here on the chart to stop us from falling. So we had our first weekly candle that actually rallied. So we had a little bit of a bounce. But notice this, right across from us where we stopped it going higher, we've got some supply right above us, just right exactly where we're at like 202.92 or so. And so we've got 196.77 to 202.92, and that's our weekly chart. So, okay. So it just kind of stopped here for a second. Francisco, here's the next chart's going to show us a little demand level that'll probably at least give us an area where we could find support for a possible pullback. Okay. This little tiny level here, you're right. I mean, there's definitely been nothing to stop this thing from falling. We've had a couple of these little areas form on the way down that have been traded through eventually. This was the last one where we had a drop base rally here on this daily chart, and we bounced off of it a bunch of times. Okay, and then finally we traded down below it. So I'm pointing it out because it's a drop base rally with a couple of days in the base. And obviously if we trade below this pivot low of the base here, we'll make new lows in this particular currency. So that would be the only reason I would say that there's a little bit of support down here now. All right, and using our strategy, which doesn't matter if this is a minute chart, a 5-minute chart, a 30-minute chart, if we make that pattern, drop base rally, you buy the first pullback and you place your stop loss below the pivot low of the base. Your first target would be so far right here. This is where we've run out of gas on this rally, so we'd have to take a partial profit here. Well, obviously, we're right across from this speed bump resistance, which used to be support in the past, so this makes sense. But you're visiting the area now. If it's enough supply to force price back down to here, then the second time we come back up here, maybe these sellers are exhausted, and then we can move on to this next area above current price. So really, I'll take a partial profit here, and if it turns out to be a 2-to-1, depending on my risk, I may move my stop loss to entry and hope for the second target up here. Yeah, Jack, if I'm ever going to trade this pair with a big spread, it's called using a limit order to enter, so that I'm not going to worry about that spread. It would have to hit my exact entry price, or I'm not taking it at all. But I certainly don't want to be opening the trade with a market order at this point. Okay. So here's we trading this pair normally, and Mario likes it too. So just a couple of suggestions since we're looking at the daily chart. And we can of course go down to the 240 chart to see if we can even clean that up a little bit better. And now we might say to ourselves, here's the problem. Okay? I've already visited this area once it formed. We have a drop. We had a base, we had a rally, and we had our pullback already. So this has already happened. Okay, now in this case, you've got a chance to put your stop loss below the pivot low of the base and ignore the big spike candle here. So you could have even tightened your risk up a little bit, but this might have been the one and only entry on this area. It could bounce again down here, no question, but that would have been the first time here, and this would have been a better trade. So I'm not sure if anybody was able to get that, but here comes a supply level just above current price, very close. We're very close to it now. So if you're looking at this 240 chart, you would want to see this area trade through, and then you could open up possibly to this higher area here. So there's another area right above here. Okay. But before we can get to here, we've got to get past here. Okay. So this could be range bound based between here and here for a while. We'll see. Yeah, Michelle, I just mentioned if I was going to trade that currency, that's going to be the one I use a limit order to enter, so that I'm not really getting killed on that spread. Okay, so that's the key. Key way to trade it would be to place a limit order and not buy at the market. So there are ways to trade it. It would be a good currency to trade for some kind of a swing trade opportunity. But as long as you're not in a hurry to trade it, you don't have to pay that spread. Okay, 60-minute chart. This will be the last thing we look at. 60-minute chart, that's the base. We did kind of identify it, but it really was ugly. but it was a drop-based rally, and it produced a couple of nice bounces. I don't know if I'd go to the well too many more times on it. So I'm going to take this line and go up here and to the left, and I've got two quality looking supply levels right next to each other on this chart, just above here too. So there should be some selling in here. But again, if you're going to take this trade, make sure you're using a limit order to enter. And you could pass on this level, go for the higher level just in case it gets exhausted. It could push through this first area and go for that second one there too. So entirely up to you. But with a 14 pip spread, rule number one is make sure you're not entering with any kind of market orders. All right? And going down and to the left, this little demand level here, if you did get an entry on this funny looking area here, yeah, here's a couple of times where you've had a chance to actually drag your stop higher. This area here would have been a good place to drag your stop loss from a long trade, just to kind of manually stay with this trade as long as it wants to continue going in your favor. And of course, these higher bases here, you could probably drag your stop loss there too. But notice how we got past this supply level, and now we've got this higher one here. We were able to actually manage to get past this one, so this one's a nice one too. Okay, and then up from there, of course, there's more resistance higher up here too. How do I define a quality supply level? Okay, Keith. Number one, when I look at a level, I look for the big move away from here. That's obviously the first thing you want to look at. So these big moves away from price, big move here, big move here. This would be what I would consider to be the first step to actually identify if I've got some kind of quality supply level. And of course, with our odds enhancers, we want to score out profit margin next. You know, the distance to the first target if I enter the trade, for example. We want to score out how much time we spent at the level. We want to score out approach here. That's always important. We don't like to see this basing getting close to these areas. We'd rather see price come up there a little bit quicker. But, you know, when I first see these supply levels, the first thing that catches my eye is how did price leave the level. All right, and this usually is the thing I use to identify quality. And then, of course, from there, the other things that we use for the odds enhancers are important too. Same with demand. You know, Keith, down here, that's a nice move. The origin of this move is very, very tiny little area here. And when I see these nice moves here, I sometimes get interested in looking for taking trades near the origin of that move. Okay. And I've had some of these ugly looking areas like this on this 60-minute chart that actually look very, very nice on a 30-minute chart sometimes. Okay. Sometimes they look really, really nice on a 15-minute chart. It's just a question of going down a little bit further and further to take a x-ray of the base itself. So that 60-minute base that we were looking at, part of it's inside of these little bases here. And so if I find a base inside of a base, that's another thing I get excited about too. This was happening in the MIT room the other day, and I'm going to show you this chart so you can see it. Take a second, because it's kind of important to what we're talking about. This is RIM, okay? And I said for anybody that wants to be an intraday trader, that wants a shot at taking a trade on a level that looks pretty nice, this is a rally-based drop, which I consider to be a quality level. And if you want to take that trade, there's your entry, with your stop loss above these highs. Okay? And really, the key that catches my eye was this big move here. So that would be what I would consider to be a quality supply level. But I also said to him, you can ignore this level. It may not even be a level if you look at a different time frame. And on a 60-minute chart, it really was just a one candle rally base drop. So I could say you could ignore this one and go for the higher one up here. Does everybody see that? Does that make sense? So this one did the tricks for a day trade, but this one would be better for some kind of a higher time frame trade or whatever. All right, so let me go back to a 15-minute chart and then go back to the currency we were looking at, which was the GBP, AUD. Okay. All right. Oops, give it a second here. Okay. Cassandra, if I took that 207 level, where would my first target be? Let's look at that 207 level and see. I really like this 207.50 level, Cassandra, and right now, my first target from here would be all the way down here. This is a drop base rally right here. So it's a long, long ways from here to here. Now, we could base here and take the supply out, and it would be a speed bump for sure. But at this point in time, you know, right there is the target from up here to 200 even, or 200, 200.70, I'm sorry. So, okay. But first we got to get through here. All right. So that would be more like swing trade from this area down. And this would be more like day trade, scalping opportunities, but limit orders on this one. Let's look at the British pound versus the Canadian next. What can I say about this one? This one here is still basing. It found some support at these lower levels, came up and is basing a little bit higher. But this could just as easily be distribution. In other words, it's one of those times where the 4 stages where you could break out to the downside and retest these lows just as easily as you could break out to the upside and move a little bit higher from here. So this particular currency is really, really range bound, similar to how the dollar goes range bound against the Canadian dollar too. All right, on the weekly chart. On the daily chart, we've had a few days where we had this, we had a drop base rally form and a little pullback to it, and we had our rally base drop and a few tests of that area too. So on this particular chart, on this particular currency, pretty boring. Oh yeah, Philippe will get to every one of them. Promise you by the end of the day here, before we end the session, I'll have talked about every one that we can possibly talk about, okay? So that you have some ideas going forward for the week. The 240 chart, these lines are old. They definitely produced a bounce or two, but that's about it. We made new lows, and now we've got a drop base rally down here, and we're kind of drifting higher here. The good news about that is, on this 240 chart, if I take my cursor and I go up and to the left, this area here is the next area where there is a little bit of supply, which rally base drop, haven't really quite got into it. But if we could take this guy out, this area here I wouldn't even consider, because we were able to push a wick all the way through this area. And then these higher areas here are more like drop base drops, so eventually we could trade through there and go a little bit higher from there. And if we do, there's plenty of stuff above here that's even better looking as far as quality supply levels go, including this 186 level here. Okay. But that's a ways away. This one here actually pushed the wick through here to here, so we're not going to take that guy and not consider him. And then we've got this big area here, which is probably still some resistance, but not really quality. Okay. Last chart we'll look at for this guy. Look at this. Here's an area too where a nearby supply level was able to get pushed through pretty easily. And then this higher supply level is where price turned. So when you've got these levels on top of each other, that's going to happen every once in a while too. Now this one, except for that big wick, is really pretty decent looking. But that big wick down there, if I wanted to consider that wick as part of my base, that would increase my risk to here, and that's big risk. So if I want to ignore that and I want to just use this, the origin of this move here with a stop loss below here, that's still pretty big as far as risk goes, from 75.57 to 76.20. That's a 50 pip stop loss. So watch that one. Maybe though, we get to pull back to this one before we get down there. Let's leave this here and just identify this one here. And this is the origin of this move up here so far. And there must be some demand down there because we got close and then turned before actually hitting the level. So structure-wise, this one looks really nice. That's the reason I'm pointing it out. As you can see, we bounced off of this little one candle job, so this one will probably do pretty good for us. And there's the origin of this big move down here. So we want to make sure we're focusing on this guy here. So we'll put our lines on the charts on these two areas here, above and below current price, just to make sure there's nothing else in the way. This area was just barely touched, so we'll watch this one too. Okay, but remember, you've got this one and this one on top of it, and so I would go for this guy and just keep an eye on this guy if I happen to be long for a possible profit target. All right. Keith says, should we give a score for wicks at our level for the odds enhancers total? Absolutely, Keith. Wicks definitely will be a game changer, or make you consider or not consider a level at all. So in other words, if you see these big wicks like this and you see all of this risk you're going to have to take on that, even though it looks really good, I would never use a limit order here. I'd use a confirmation entry, and I might want to go inside this thing and look for some smaller area to actually take a trade. So, this part here, though, the way price left here and the way price left here, the first thing that's catching my eye. And then from there, the structure of the levels. This is nice structure. This is structure-wise, it's nice. But you can use big wicks as a filter to not take trades on any of these levels, or to take confirmation entries on levels that otherwise might score out to be limit entries. Okay, so as in about sometime this week or so, hopefully, Sam has actually got a document where he's been working towards scoring levels with the odds enhancers built in, and a lot of you already have this document, so it'll be good for you though. Anyway, it automatically calculates the levels. I don't know if he showed it to you the last time he was here, but it automatically calculates the level, calculates the score, and if it doesn't score to be a 6 or greater, it tells you to pass on the trade. So somebody came up with it and really did a nice job. So we'll have that for you as soon as it's ready to roll out. And it definitely will improve your trades with the odds enhancers on the ones that you do take. Slowly but surely, folks, we're working towards that ultimate goal of having stuff that you guys can have that's going to be beneficial for taking the right trades at the right time. All right, so here's our here we are still and stuck in the ranges here on the British pound versus the yen. We did manage to break out of this stage 1 down here on the weekly chart. We did kind of start a new little uptrend, but we really aren't going anywhere, so it's not happening in a hurry. So we have our drop base rally below current price, which should be a little bit of support. And so we can see the price right here. I'll just put this line here. Here's our rally base drop above current price. And so we definitely have some resistance close by too. And I've got my daily trend line here, and it looks like we're just above that trend line and looking like we're coming down to the trend line. So now you've got a little bit of a supply level above current price here. Now this was the supply level that kind of forced this to happen here. So we just want to make sure that everybody understands that we had a supply level here, rally base drop, found some support, rallied back up here again, and made another rally base drop. So you could definitely score this one out on its own, because this rally base drop all by itself. And this is what we say, that sometimes you'll visit an old level and a new level of form, and now you get the opportunity to score that out. But everybody kind of see how we've got this drop base rally here, which is just a little bit below our trend line there. So we could come down below our trend line, bounce on this little demand level, and then close above our trend line. And of course, your trend line traders will be all over this. Okay, they'll be buying that. Okay, so we'll keep an eye on that. Again, tight ranges, small ranges. Here was our rally base drop, and our push into the area back on 5.8, and our second push back into the area on 5.10, and on our 240 chart. So this there is some supply up here, and I kind of identified this area below current price. Another one of those big wick situations where if I was going to take this trade, I'd probably, because of the wick, use some kind of confirmation entry to kind of limit my risk. And just want to point this out, the origin of this big move here at around 140. So stuck in the ranges, not really going anywhere. Got a support level below current price, trading through this one. So we may drop down all the way to here. And above current price, a couple areas where we could turn ahead of this supply level. And if you were short, this is the nice thing about this. Each one of these ones that I'm marking off here, if I was short, would be a place to drag a stop loss to. Because if we trade through one of these levels, you would probably want to get out anyway. And the last one would be this one right here, which just formed recently. Okay? And that's how you can stay step by step down the ladder. Okay? Yeah, there should be a, oh no, yeah, the recording should be going. We should have this here. I did turn the recording on. It should be available by Monday, Keith, as far as I know. Or it should be available on Monday. This was a little drop base rally that we bounced off a couple of times. Okay. Nothing really of quality now on here. Remove this. We haven't looked really at this one for a little bit here. Should be available immediately after the session, but I have seen it dated. Just so you know, I have seen it dated with Monday's date instead of Sunday's date. So you may want to look to see if that recording has Monday's date on it. And I think that's what the problem is. But it is the Sunday recording. And as usually, as soon as I shut down, it becomes available. All right, so the 60-minute chart, here we are, current price, and I'm going down and to the left. Nothing really of quality until you get down to just around 141, still a little bit above 141. And you know, we've got a rally base kind of like big drop here. So watch it if you happen to, you know, do take a trade down here. You'd have to keep an eye on these areas too. Okay. All right. But let's get down to our British pound versus the dollar, which has really been, you know, a nice little uptrend for the last few weeks anyway. Okay. Yes, that Cassandra, that demand level below near 140 is low on the curve for a high risk opportunity on that currency. Yes, it is. So for a swing trader, the the British pound versus the Japanese yen, that demand level near 140 would be a good place to look for some kind of a opening a swing trade. We'll go back and look at that before we're done here, but good catch there. Absolutely. All right, so here's our British pound. Here we are near our trend line on our weekly chart, still in our nice little strong uptrend so far. Daily chart, I made note that we seem to be finding a little bit of support on some of these lows here, but we've got a rally base like the euro had last week. So this could break out to the downside, or it could break out again to the upside. Not really sure which way it wants to go, but it has been very, very strong against the dollar. The bad news is there's a rally base drop up here near 153. We got really, really close on this candle here on 515, and there is a lot of supply up here for this to happen. Okay, and now we've got this drop base rally, which we've already touched once here at 151. So 151 to 153, which is again a tight range for this particular currency. This thing usually likes to move in bigger ranges than this. So either this supply level gets absorbed before we can go higher, or this demand level gets taken out. And notice already we visited this area twice. So if this goes away, then the next demand level below current price is right here at about 150.20. So if they want to open the range up, it could. Okay. All right. Yeah. Very, very tight ranges on this currency here. So with that in mind, this is a couple of things that I marked off, like I always do. We were very close to breaking out here. We were testing up with the possibility of a breakout, but we failed. We had some news last week, economic data that forced the British pound to sell off, and then we made this big rally, base drop, and rallied right up into there. And that was our supply level that we marked off. And we've got this demand level here just about a little bit above 151, right about 151. And now, here we are. We're just right here at the beginning of the week. So we're basing, we could make a drop base rally out of here and never even test the supply or the demand level and have a new demand level here, or we could poke a candle down here before we actually trade back up this way. But the good news is if you are short, you've done okay with this trade if you saw this supply level and wanted to get short. And I always mark this off, especially for new people. Textbook support is old resistance is new support. So at one time this was resistance, it should be support. But then it makes the supply level rally base drop. And the origin of this big candle here, we always want to watch out for a possible sell-off when price reverses to that area. So another reason why we don't do breakouts in here, if it would have broke out through the top and pulled back to the origin of the breakout, then we would have had a breakout. This possible breakout is like, forget about it. It didn't happen. Okay? So, if it makes a rally base drop, we try to short the first pullback into that area. And below here on the 60-minute chart, I always have a bunch of demand levels marked off and some support areas. I've got this pivot low marked off because we bounced here once. It was the origin of this move. And this pivot low here, got that marked off too. Textbook support, what all the other people in the world are looking at. But we're looking at these demand levels like this one and this one here. So we'll watch this guy right here just to find out the price there. This price is 151.06. So let's just write in there. We're looking for some support down at 151.06, and we'll mark it off on here. So we'll keep an eye on that. Okay. All right, so that's our range on the British pound versus the dollar. And again, another situation where there's demand below and supply above, very close to each other. But I like this guy up here. I've had this guy marked off for a little while. Okay, except for the wicks. I'll use a confirmation entry up here if I possibly can because of those wicks. But the origin of that big move is going to still be a nice opportunity for us to take a trade going forward. And as we take some of these demand levels out below current price, that'll open up our profit zone for possibly some kind of a nice move down to an area below here. Let's call this 150.50 area our target for that right now. Okay, oops. Would help if I could spell. All right. Okay. So that's our British pound on really, really small time frame charts, and you know I do trade them on the small time frame charts myself. Let's look at some of those New Zealand currencies because there has been a little bit of action this morning in there, this afternoon too. Whoops. The New Zealand versus the Canadian, we got a nice drop base rally below current price and a nice rally base drop above current price. So we've got our ranges marked off here. And just so we can see what that price is there, that's about 71.27 and 64.70. All right. Yeah, sure. There's great ways to set alerts on, especially on TradeStation here. You right-click on here and you format a horizontal line, and the first button is called Alert. You check the box that says Enable Alert, but make sure it doesn't say Breakout on Close. Make sure it says Breakout Intra-bar or Interbar. So notice my drop-down menu here. I can change that to Breakout Intra-bar or Interbar. And set it to alert once per bar interval. So this is a weekly chart, so you're only going to get one alert. But if you set it to alert continuously, this thing will drive you crazy. Okay? So set it to alert once per bar interval, and then set that as default so that every time you put one of these horizontal trend lines on your chart, it'll do the same thing from now on. Click like that. And that's TradeStation's way of setting an alert. Same for the trend line. Right click. Yeah, Keith, I'll show you how to do that too. Send alerts to your trend line. Format trend line. Go for alerts. Change your setting to breakout intrabar, interbar. Alert once per bar interval. Check that box. Now, use global messaging preferences. Hit configure. Okay. It brings up this box here. You can get a visual pop-up window. You can also set an email. Configure here. All right? So once you get your email box, you can type in your email address. Let's, whoops, at Gmail. Now, here's something you have to know in order to get your alert to work. You could send it to the same email address if you want. I'm going to send it to the same email address. Sometimes if you happen to have Outlook or something on your computer, you might want to use your Outlook address or whatever your default email address is. You got to use an SMTP server. Now you can look up your SMTP server if you're not sure of what that is. Okay? So you can look it up here if you click on here, and it'll give you a whole list here. So Comcast is smtp.comcast.net. So if I want to, what I could do is I could send this alert from my Comcast email to my Gmail, okay, or to my cell phone, and I would do it using Comcast, which is smtp.comcast.net. So smtp.comcast.net. And if I want to, I can separate email addresses to send it to my cell phone. I would type in 847-312-9474 at tmomail.net, which is T-Mobile's. Okay, does everybody see how to do that? And then I'm not sure any of these SMTPs require authentication. You'd want to send short message if you're sending it to a cell phone, and you could test it here. And if you get an alert to your cell phone, you know it works. Click OK. Click OK. Set as default. Click OK, and every time you hit one of these trend lines, you'll get a beep. And you can definitely have a alert to your cell phone, and you can, if you have someplace in the house, you can come down to the trading room and do your thing. All right. More importantly, I'll have my cell phone number. It's okay. My cell phone number's on the bottom of my signature for every time I send you guys an email. You just didn't catch it. All right, let's go on here. So we've got the daily chart on the New Zealand here. We had this supply level, kind of tagged it once already. So we have some supply up here at about 72, and we've got that nice demand level down at about 67. And we're not really going anywhere, so we're kind of in the middle, 67 and 72. And our 240 chart here. I will say one thing though, if anybody does call me, you're not going to get me awake after about 6 or 7 o'clock in the evening, because I'm usually in bed by then. So you can call anytime after 2 in the morning. All right. And if you're lonely, Scott, yeah, you're going to have to leave your chart up the entire time for that alert to be active for sure. Going to have TradeStation open for that alert to work. On this 240 chart, there's a nice supply level at about 72 we talked about. The demand level doesn't look that great. We've already tagged it one time down here, but we'll keep an eye on it at about 67.50. Okay, but we could definitely find some more buyers down here too. Problem is though, on this 240 chart, we made another little supply level right here. So the playing field is definitely getting narrow in favor of the sellers. So, okay. All right. And last thing, of course, 60-minute chart. See if anything jumps out at us. Here's our current candle. Down and to the left, you only have that 2 candle base here that's already been tested once, so there must be some buyers down here because we already had a pullback and a nice strong reaction from the level, so we'll make sure we make note of that. But that's a confirmation entry for sure. If I get that close, I'm definitely a confirmation entry on that entry there. And above current price, again, get my trend line, go up to the left right there. And again, we've already touched that one once. So I would use confirmation on both of these levels if I wanted to trade either one of these levels. All right, going forward. New Zealand versus the dollar. So coming up on their economic data for New Zealand for sure. Weekly chart. It has a base right below current price on a weekly chart. This big strong move up here, we want to watch the origin of that move. So on the New Zealand versus the dollar, we could have support this week down here at around 57. And we ran out of gas up here, so there's still some supply in this area. It was this rally-based drop here, which at one time I had lines on the chart, but it looks like they disappeared. Okay, so this is the range that we're trading in now. Just make note of that area and this area here. But we have hit this resistance area at 60.50. We've hit this resistance area several times already. So we can take this guy out. A pullback from 57 here could take us all the way up to this guy right here. And so we could go for a long ways from here, all the way up to about 68.50. So this one we'll keep an eye on for sure. So we've got, excuse me, we've got a rally-based drop and a drop-based drop below that. And so for trailing your stop losses, if you're short for whatever reason, every time you base in your drop, you could drag your stop. Now on this 56 area here, on the daily chart, we've already penetrated this area almost all the way. So I'd be careful taking a trade here again. Confirmation for sure, no question. But above there we have this supply level, which we kind of tagged at the beginning of May here on the 11th, closer to the beginning of May. And then we made a base drop and a base drop here. So there's our range, 59 down to 56.30 so far on this one. And as I drop down to these smaller time frames, of course, again, taking my cursor and looking for bases above and below current price. 240 chart, there's something inside this area here that I want to look at on a smaller time frame chart because of this big move. So far this move is stopped here, and then below here we've got this guy right there at about 57, 58, closer to 58. Okay, so 59.50 to 57.80 or 57.90, closer to 58. So that's my range right now. And if I go to a 60-minute chart, that should be some opportunities inside these areas here. Big rally base drop up here. This was the guy that turned things down, though. And again, these things form after our sessions. Price keeps moving. So if you see a rally base drop like this form, and you're interested in taking that trade when price comes back, when you get these big wicks, though, you might want to use confirmation entries or smaller time frame charts for entries. But close to the 60 level would have been a nice place to open up a trade. So far, we managed to trade all the way down to here. So we're bouncing on speed bump support right there, with a little base right below here, and another one below that even looks better. Why do I say it looks better? Because more time, bigger move away. Actually, this two-candle job really doesn't look bad either based on how far we moved away, but this one at least is a little bit farther down to open up a bigger profit zone. But this one could turn the price around too. So when you get these two levels like this, it becomes a decision that you have to make on which one you want to take. And this is the one here above current price right now that we were just looking at on the 240 chart that just formed. So obviously from here to here is good, but from here to the next one below would even be better. All right, so watch that one. We'll watch that one for the rest of the week and see what happens there. Okay, let's see here. Moving down the list to the Canadian, we'll do these last three. Then if I missed any, let me know. We'll try to get to that one too. Our dollar Canada finally found some support at 114. Yeah, coming up, Philippe. We found some support at this 114.80 or 115 area, and we bounced last week. So we closed right here so far. Did we build a demand level on the daily chart that we could lean on? Some say yes. All right. Drop base rally, and we had a pullback already on 515, so this turned into a little demand level below current price. So now we could bounce on this guy for a while, take it out, go lower, or we could rally up to one of these higher supply levels. 240 chart, drop base rally, and another one here. Haven't visited either one of these. Okay, and above current price, we didn't see anything to get excited about until we got up into here. So that was why we had that line on the chart. But we've definitely made a couple of bases here that have to be taken out before we can make new lows this year on this currency. And we had a pretty nice little snapback for the dollar versus the Canadian. And lastly, we moved down to our 60-minute chart on this one here. And we came up to this level up here. So we traded through this level, and then we came down, and when we traded up to this level. So that's why I mark them all off, folks, because you know, price is constantly in motion here. We may have some kind of a bounce on the origin of this little pivot low here. And we may have a nice base inside of here that could actually support price. But notice, it didn't go straight through here. It came back up here and stalled out. Now it could base here and absorb the supply at this price level and go higher to here. And this would be a good place to initiate a possible new short position. But I wouldn't ignore an opportunity, to buy a dip down to this little pivot low area here. And again, if I've got trading range trading, I'm okay with trading. I'm okay with trading here down to here or here down to here. Doesn't matter to me. We're hanging out here. We definitely seem to be absorbing the supply here. This is the second time, third time back into the area, so no problem. Okay. I think I'll go myself if I'm going to trade this one for these higher levels here and this lower level here. And I would probably go something smaller than just to see if I could eliminate that pivot a little bit. This is the 30-minute. Look at the origin. I want to find the origin of this big move here. So the 30-minute doesn't do it for me. I'll look at the 15. Okay. This is the 15. It's still a big area. So maybe I'll use a confirmation entry when I get there. Lastly, I'll look at the 5. And if I don't see anything I like, I'll just pass on it. This is the 5, and it's actually this tiny little guy down here. So we'll watch this guy, see what happens. Okay. But there we are hanging out here, not really doing a heck of a lot. We kind of had a little drop off this morning. So if I was looking for a short opportunity up into this little resistance area here, remember though, at the beginning of the day, if you have any kind of economic data, okay, if you have any economic data, you might want to pull your offer on this little supply level and go to a little bit higher time frame chart to look for an area. Okay. All right. Let's move down to the Swiss next, and then the yen, and then we'll wrap it up for the day. We're running a little late, but that's okay. There's our Swiss on the weekly chart, just opening up here a little bit higher with the supply above here on the weekly chart and that funny looking demand level with the big wick down here. So we're kind of in the middle. But on the daily chart, what do I have here, guys? On that visit to this demand level down here, I made a brand new drop base rally. Okay, so that means that right down here, at this price level here, I've got some support at around 111 or so. And I'm rallying up into this little rally base drop right here. So again, the beginning of this week is going to have some tight trading range stuff going on. And if you guys, if you're trading, just make sure you're quick on the draw on profits on either longs or shorts. Okay, but that demand level, which we marked off last week, did produce a nice little bounce. And there's what it looks like when it happens. Okay. Might have been some New Zealand news, I think, when we looked at the beginning of the day. Okay, so I'm sorry, 240 chart. Drop base rally formed between 513 and the beginning of 514, and there's your two bounces, and there's the rally base drop above, and here we're hitting that little resistance. Remember, I marked off this textbook resistance last week. Again, only because everybody else looks at the same thing you're looking at here. And so we kind of stalled out here on the 240 chart for a couple of candles so far. But the trap is, when you break these highs, everybody's going to get all excited to get long right into this. That's the trap. And that's why we kind of make note of these areas. Okay? Because you don't want to be taking that breakout into that supply level. Okay, and we rallied past this supply level if you were trading on a 30-minute chart, and we made this nice little demand level on a 30-minute chart. So we've got some quality levels here to hold us up on tests back down to if we pull back this week. So we definitely have some nice stuff on these charts. We just have to get there. Actually, we've got this little area here too on this 30-minute chart. So we might bounce on this. Obviously, looks like our low of this candle so far got really, really close to this area. Okay. So what happened here? Why did we have that big dollar move? Well, we had the Swiss franc again. They did some kind of intervention move in the currency last week. Quantitative easing, I believe, is what they call it. And on that 15-minute chart, here's one of those situations where you had a demand level here and a demand level below. So when we came down to this demand level, we kind of bounced a little bit and then traded to the lower one and then pushed on through. Very frustrating if you bought this one and got stopped out. But if you got a chance to re-enter on that one there, it made up for it. So unfortunately, in everybody's life, you have to have a few losers. Okay? All right. Let's go on to our Japanese yen, and then we'll wrap this up for the day. Okay. Let's go to our weekly chart. So what happened here? No more uptrend. Okay. Kind of came up to this speed bump resistance at about 100. And we poked our head in there, and then we made a rally base drop and rallied into it and then sold off last week really, really hard. Broke these lows, and we could come back at this point to the origin of this whole big move up here. And so we're back into a trading range on the dollar versus the yen, just like the other currencies are too. Okay, that was our supply level that started the whole thing at the beginning of April. So this has just been a gradual grind. And what's happened is we've taken out a couple of demand levels below current price, drop base rally, pull back, traded below there. Now we've got that speed bump looking kind of support area coming up here again at around 94 or so. Used to be resistance in the past, and it's been support in the future a couple of times. But below there, we got a long ways to go till we get down to a demand level closer to 90.50. So, demand level there, and above current price, of course, we had this supply level, and we've also got this supply level here now. Okay. Which will wrap a couple of lines around here. So there we go. We're in the middle of no man's land. Okay. Between about 98 and 90, which is a big, big range on the daily chart. Our 240 chart has got this big drop base rally here, drop base rally, the origin of this big move, and we've been trying to get down there and bounce off of it for a few of these 240 charts. So there's definitely some interest in this currency down here. Okay, and believe me, it looks like almost like a rally base rally, but when you take it in context of this big drop, then this whole big area is a big drop base rally. And again, I'm noticing that big move away from there, and we can't even get down there. There's so many interested buyers. Okay, you're going to see that with competition. The better you are at picking these levels. The only bad news is we're hanging around above this thing. We're not really making any kind of a break to get out of here. So we could be absorbing the demand down here too. So we go to our 60-minute chart next. And we had last Sunday, we had a rally with a gap, a base, a drop into a demand level below current price. That pushed us right up into the supply level, and then bang, we traded through that demand level, because each time we visited this demand level, more and more buy orders got filled. Eventually, the number of willing buyers drops to 0, and all of a sudden it's a move lower, and we're bouncing on these other little areas to the left of here. And each time we do, we absorb the demand in those areas, and we create new supply levels above us as we go. Okay? We actually hit this little pivot low area, which was a drop base rally. And there we had 1, 2 tests, and then finally a trade below. Okay, we hit this area. Drop base rally, we didn't bounce at all. Okay, so coming down further below current price, we've got this big drop kind of base rally kind of situation, the origin of that big move, and that's that area that we're looking at around 94.70 right now, where we're kind of trying to bounce right now. Below that, we've got 93 or almost 94, and then this nice one down here close to 93. The origin of this big move. But each one of these moves has produced a little bounces, but we're definitely selling off, so the sellers are winning the battle, and any kind of a rally, these people are shorting. They're shorting any kind of a rally. Okay. All right, so last thing we're going to do is wrap a couple of lines around this on this 60-minute chart for some areas above current price. Want to watch the origin of that big drop from the other day. But remember what I say about the nearby supply levels. Okay, if this turns into an uptrend again, and we start to base and rally from here at this price level, we're filling this gap right now. If this turns into some kind of an uptrend, expect these areas nearby here to get traded through as price works its way back up to the top of the chart. So we've got this drop base rally which we're bouncing on, and we're trying to fill the gap right now. Okay, so the last thing I want to say to everybody is be flexible here. Okay, these are nice supply levels. If you do take that short, you could come back and visit this demand level and sell off. And as a matter of fact, there's another area right above here too. So you could see, if you see price base and rally past any of these supply levels though, then don't short these nearby supply levels. Use it as an opportunity possibly to buy a dip to a new demand level. All right, because these supply levels will have to go away in order for price to go back to the top of the chart. And that's probably the last best thing I can tell you before we end our session today. Remember, the nearby supply levels have to get traded through. Now, obviously, this one could turn price down, and you could go down to that 76 area below. But if you do, you could go down to this lower area here. But if you do, that may be where you get another one of those engulfing candles pushing past all these nearby supply levels, like this guy here. So just be really cautious. I wouldn't short this guy. I might give this guy a chance before this guy for sure. Okay? All right. That's an extra half hour for our trading and analysis this week. But you guys deserve it because you're all good kids. And I want to see some of you guys have some nice trades this week. It's just going to be tough because everything's on top of each other. So unless you have any specific questions, I'm going to wrap our session up here for today. And great. Yes, good. All right. Adios, everybody. Thank you very much. Enjoy your evening. Enjoy your day wherever you are. And thanks for showing up and spending some time with us. And we'll see you mañana. Have a nice one. Bye.